Hello everyone, and welcome to the fourth in our series of short videos talking about developments in the precious metal markets. My name is Rhona O'Connell. I'm the head of the metals market analysis team for StoneX Financial Limited, and we're based in London. So it's been more of the same, I'm afraid. Gold has been holding to a terribly tight range over what is now almost 8 weeks. Silver's been a little bit wider, but then silver would be because silver's the more volatile of the two metals. So, since we've concentrated on gold over the past 3 weeks, I want to look a little bit more closely at the silver market today, which is a fascinating one. For many years I've referred to silver as Cinderella, because she's like Cinderella in the fairy tale. You don't see her doing very much. She's working very hard in the background, but she's never seen. She's below stairs until the fairy godmother, usually in the shape of a rising gold price, says, "You shall go to the ball." And she arrives to the ball looking wonderful. She entrances everybody. The prince falls in love with her. But at midnight, when she leaves even faster than she arrived. And that is normally how the silver price works. So we saw a peak of about $120 at the end of January. We're down by 54% since then, but on a 12-month basis, we're up 55%. So it's still performed pretty spectacularly. By comparison, gold has come off by 28%, but year on year it's up by 19%. So there you can see a perfect example of how the silver's beta against gold is a wide one. It's usually between 2 and 2.5 times. So what we've had over the past year or so is a big change, particularly since we had that enormous price hike, in the patterns and the nuances of investment activity in silver in particular. Last year, against mine production of about 27,000 tonnes, we had net ETF inflows globally of between 8,400, 8,500 tonnes. So far this year, we're looking at a decline of 2,450 odd, which means we've got a net swing just in the ETFs of minus 11,000 tonnes, which is almost 6 months mine supply. COMEX inventories have also come down, but then of course we did have that massive increase in inventories into the States when the prospect of tariffs came up, and nobody quite knew what was going to happen to silver. We still don't, to be perfectly honest, but we think, bearing in mind that bullion and doré are exempt, that most of the other semi-fabs will probably be exempt as well. So inventories are now back down to where they normally stand, which is between 9 and 10,000 tonnes. They did actually reach 16 at one point. So with these marked hiatuses and almost fracturing in the market at the end of last year, what are the prospects? Well, for the time being, silver sentiment is suffering slightly. The largest component of industrial usage is the photovoltaic cells. Now, they are currently oversupplied. Silver is a very important component, but by definition, on a unit basis, it's expensive. And therefore, like all expensive components, there has been thrifting activity ever since the first solar cell was brought off the production line. And there's also now some competition from copper. So it's been receiving a little bit of bad press as far as that particular sector is concerned, and that may well be hampering sentiment for the time being. The other thing that I would say is that supply is consistent. It will keep on coming regardless, because only 28% of mine supply is from primary silver mines to which you ascribe a cost of production. The rest is byproduct from either gold, lead zinc or copper. So silver supplies, and then of course you've got industrial scrap, which takes the component of total supplies down to 21% from 28%. So the amount of silver that's coming into the market is much more a function of the business models for copper, for lead zinc and for gold. It's going to keep on coming regardless. So eventually we will have some price discovery, which is likely to probably stay around about the $60 level, to be perfectly frank, because we've had this big rate of change. We have definitely started to establish a floor. But because you can't ascribe a cost of production, we can't do the normal classical analysis and say, well, this is the market clearing price. So that's when we have to start looking at gold again. So the gold-silver ratio is currently standing at around 70. It's holding there relatively steadily. So for the time being, I think, and I hate to say this, it looks as if it's going to be more of the same. The one thing that I would point out, which is specific to silver, is what's happening in India. At the moment, demand is relatively sluggish. There are some banks waiting for import licenses. We are also in an inauspicious time of year for weddings or for significant ceremonies. That doesn't change until late November. So for the time being, bearing in mind that India is responsible for 59% of the world's silverware, and 41% of the world's combined jewellery and silverware. You can see how important it is, and for the time being is resting quietly in a corner. So if I had to put a specific timing on when the fundamentals of the silver market will change for the better, it will be end of November, start of December. So I hope that helps. Thank you for listening. If you have enjoyed it, please do like and subscribe on the screen. See you next week.